Good evening, everybody, and welcome to Serene Education. Please could I ask that you make sure that you've got a pen and paper ready, because this is going to be an interactive webinar and we're going to have a little bit of fun tonight. Before we start this presentation, may I please ask that you read through our disclaimer. By continuing with this presentation, you are agreeing to the terms and conditions within. Well, it is goodbye 2014 and hello 2015. And you know what? This is the best time of the year for me. And you know why? Because everybody's happy. Everybody has got a New Year's resolution. They're positive. The spirits are high. And just basically people are happy. They're motivated. They want to make a good thing of the year. And that's why it's so enjoyable for me, because I love people being so motivated. And I'm really happy tonight as well, because we've got so many new people that have found Serene Education either online or through somebody else that have joined us this evening. We've got a lot of our FX professionals that are in the year-long training with us, which shows me that they are staying in the fire, they're keeping motivated, which makes me happy as well. And we're seeing people that we haven't seen for a very long time joining us as well. So all of that together, it just makes for a really good webinar, I think, this evening. So what I want us to do is have a little bit of fun, make sure that you're interactive with me, and let's enjoy this evening's presentation. So who are we? As I said, we do have a lot of new people on. The people who have been with us before are saying, wow, that's a different picture than what you usually put up. Well, the reason being is Chris and I want to present ourselves as the people that we are. We had a picture of us in a business suit up before and all of our other presentations. That's not really who we are. We're just the average people, just like you and everybody else, that had a goal and just worked really hard to achieve it. Chris and I are both from South Africa. Chris came out to the UK in 1999. I came across in 2001. I met him on the first day that I arrived in the UK, and we've been together ever since. We've worked really hard to get where we are. Chris was in the courier industry. He used to cycle around London delivering passports and credit cards. And I was in the hotel industry working really, really silly hours before moving into the financial education industry thereafter. I started to learn how to trade the stock markets alongside Chris. I then moved into Forex. Chris stayed with stocks and the indices. And he saw the difference between how much work he had to put in with the little hours that he had with his job in comparison to what I was doing with Forex, and moved across, and we've never looked back since then. In 2008, we had both given up our jobs by then, and we moved up to Wales, and we have not been employed since then. Trading has been our full-time business, our full-time income, and loving every moment of it because of the freedom that it allows us. And this is what I want to share with people and encourage people, that you don't need to work so hard for somebody else to make that money. Work hard on yourself and make that money for yourself. The agenda for this presentation, we're going to determine a 2015 action plan. To me, that is the most important thing of every year, is to sit down and put a pen to paper and decide what you want from that year. This is not your personal things. This is purely going to be revolved around trading the Forex market. We're going to look at defining who you are and what you want to trade or what you need to trade. We're going to look at reasonable expectations that you can look at. We're going to have a look at the results of our current students. We might even have a couple of them online to talk to you tonight, which is a great, great thing as well. We're going to look about getting educated, and then Chris at the end of it is going to do live analysis, live on the markets, using both the Forex Made Easy strategy, which is the more basic novice type of strategy, and then our FX Ultimate 8 strategy as well. So we've got a lot to go through, and this is where you need to get your pen and paper out. We're going to have a look at the different types of trading styles, and then we're going to define which one would be best suitable to you in the position that you are in now. The first one is there's scalping. Now, this is very hands-on. You've got to act and react very quickly. It's in and out the markets all the time. It's taking small amounts of money but consistently. Then we've got intraday trading, so you might be in for, say, 30 minutes to 3 hours. 4 hours maybe. You're trading the intraday type of market. This requires you to be in front of your computer a lot of the time. Then we've got day trading, where you're going to be trading off the daily candles, and you'll see as we go through the presentation, this is most suitable to most people out there. So you'll be trading daily candles, so you don't have to be stuck to your computer 24/7. Then we've got swing trading, so you might be in a couple of days to a couple of weeks. And then we've got long-term trading, where you might be in for a couple of weeks to a year and going forward from there. So in order to define which category you should be trading, we're going to have a look at the different types of positions people are in. So the first one is you could be retired. You could be a part-timer, so you just have work every now and then. You could be a shift worker, so it can be night shifts, day shifts. You can be a full-timer, which I call a 9-to-5er. And then you've got the self-employed or business owner. So write down which one of those you fall into. So, are you retired? Now, retired people, let's say you've got more time on your hands than the people who are in full-time jobs or even part-time jobs. You've got more time to think and make decisions. Now, when you're looking at the markets, it's always good to have that time to really think about the decisions that you're going to make. Your mind can be focused on the market at all times whilst trading with no distractions. We always know that work is always a distraction. The only downside of it, and it's no disrespect to people, is that the older you get, you're not able to act and react as quickly as you were when you were younger. I know, I'm getting old. I'm starting to slow down a little bit myself. So, you know, that is one of the things about getting older, is that you are not able to act and react as quick as you used to. So, what type of trading would be best suited to you? Well, scalping? No, because remember what I said, you've got to be able to act and react quickly with scalping. You've got to be in and out the markets. You've got to be really attentive at what is going on those charts. Intraday? For sure, you've got the time to do that. Day trading? Yes. Swing trading? Yes. Long-term trading? Absolutely. Maybe you're part-time employed, so you don't have a fixed contract. You've got more time available than full-timers. You might have abnormal working hours because of this. You might have possible job and financial insecurities, which leads to fear in the markets. Without having a stable income, you might be concerned about having enough money to trade or whatever it might be, and that's going to be covered later on in this presentation as well. And you might have the ability rather than the means, which is fear. Now, why I put fear and money in brackets is because fear and money are the two main factors that hold people back from actually moving forwards. But we're going to show you how you can work through that in order to start making an income for yourself. So what type of trading would be best suitable to them? Scalping? No. Intraday? No, but possible. Now, why I put no but possible, remember what I said about intraday. You need to be in front of the markets all of the time throughout that day. So if you are working or part-time, whatever it is, it's going to take away that time that you've got with the markets when you are working. That's why I put it is possible, but it's not recommended by us. Then you've got day trading, yes. Swing trading, yes. Long-term trading, I put no. And the reason why I put no to this, it is possible, but the longer the time frame that you trade, the more risk that you are carrying because of where your stop loss, your safety net has to be. So you would need a bigger account in order to be doing long-term trading. Are you a shift worker? Right? You still have the ability to trade because the markets are 24 hours, so there's absolutely no excuse. Abnormal working hours can mess up the body clock, and because of that, it can make you tired. Your concentration can go. You may not be able to act and react accordingly. It depends how you are with those particular shifts that you work and how your body clock works. So what type of trading would we recommend? Well, scalping? No. Intraday? No, although possible, because as I said, you do need to be in front of the markets all the time. If you are not working, you can be in front of the markets. Okay, so there is the possibility, although it's not recommended. Day, yes. Swing, yes. And long-term trading, yes. Are you a full-timer? Now, a full-timer, you have the security of an income, and that's always a great thing when you're starting trading, is that you are learning something new with the stability of a paycheck still at the end of the month. The problem is that you have to focus on the job that you're getting paid to do rather than your trading, which can become a distraction. And those distractions can be within working hours, and they can even be after hours. I mean, Chris will be the first one to tell you that the job that I was in before I left, I used to get phone calls up until 11, 12 o'clock at night, and they would start phoning again at 5 o'clock in the morning. So that did make things a little uncomfortable. You have the ability to think quick, which is always a great thing in trading, but you might not have the time to act and react fast enough because of your commitment to your full-time job. So having a look at the different types of trading, scalping, would we recommend that? No. Intraday? No. It is not possible. Too many people are trying to trade intraday because of maybe the less risk it carries or the feeling of wanting to be in a trade. Remember, when you have a job to do that you're getting paid to do, it is not possible to sit in front of the markets 24/7, which is required for an intraday trader. Day trading, yes. Swing, yes. Long-term trading, absolutely. Are you self-employed or a business owner? Well, you have the ability to make your own meetings with the market, which is absolutely great. You can decide, well, at 10 o'clock till 12 o'clock, I've got a business appointment, and that is with the markets. But often owning your business, you're working longer hours, so you've got to bear that in mind. And you might have distractions with employees, your profit loss, your business development meetings, etc. So all of those tie in as well. So would we recommend scalping? No. Intraday? No. Although possible, because again, running your own business, you can set your own diary. Day trading, yes. Swing trading, yes. And long-term trading, yes. The thing is, too many people are trying to trade the wrong time frames in relation to what their lifestyles allow for. And this has got to be the biggest problem. It leads to a demise in the trading accounts, lack of confidence, and fear of the markets, which is the biggest reason why people stop trading. It's because they don't trade according to their personalities. And your personalities and what your job and your circumstances allow you to do is one of the biggest keys to making you a profitable trader. You don't have to be actively in the markets all of the time to be a good trader. You know, sometimes Chris and I might go days without taking a trade, but it doesn't mean that we're a bad trader. And that was probably one of the hardest lessons we had to learn, and one of the hardest lessons you'll have to learn as well, is the key to success is consistency, and the key to success is patience. So I want you to write down which one you fall into. Now this will determine what time frames you should be trading. So should you be a scalper, an intraday trader, a day trader, a swing trader, or a long-term trader? Now you'll notice there, every single one of them had a cross next to a scalper. I don't believe that anybody should be taking 1, 2, 3, 5, 10 pips from the market. You know, you put a lot of effort into your analysis to make the right decisions. Your rewards should be a lot more than that. And also, you don't want to be sitting in front of your computer 24/7 glued to your mouse and your keyboard. The next thing is we want to determine your expectations. What do you want to achieve from your trading? The first thing is, I want you to be realistic in relation to the level at which you trade. If you are a novice trader, don't write down, I want to make £1,000 a day. I want you to be realistic to what you want right now based on the level of where you are as a trader. I want you to determine what you want to, it might be what you want to make. I want to make £50 a day. I want to make 200 pips a week. I want to have, if I take 10 trades, I want 7 of them to be winners. Whatever it might be, this is what you want to achieve from your trading. Then you're going to determine how you're going to achieve them. Do you have the experience to fulfill these targets? Do you have the knowledge? Do you have the strategies? You know, what is it that you are going to do in order to make that amount of money or that amount of pips per week or per month from your trading. You know, it's very easy to sit down and say, I want to trade. Well, why do you want to trade? You know, what do you want to make from it? What do you want to do with it? Those are the big key points behind trading as well. So write down what you want to achieve. And you know what? It might even just be learning how to trade. And then you know what you will be able to expect. If you're already trading, then you might have an idea of what you want to expect. So that's the next thing that you need to write down. The next thing is, what pairs will you trade? Now, this is a big thing because, you know, so many people just go, oh, I'm just going to have a look at everything. It doesn't work that way. When you are a novice trader, you need to focus on a fewer amounts of currency pairs so you can get to understand the market. You can get to understand those currencies, see how they move, see how they act, see how they react. Not you acting and reacting, how they do to news, to support and resistance levels, to all of those things that you're going to learn about. So with novice traders, we always say start off with the 4 major currency pairs. Now that's the Euro US dollar, the Pound US dollar, the US dollar Japanese yen, and the US dollar Swiss franc. You know, once you master these, then you move on and you start to add, and this is when you become an intermediate trader. Now you should be looking at those 4 major currency pairs plus the other 3 US dollar cross pairs. Anything cross the US dollar is a heavily traded currency. So we're going to look at the Australian US dollar, the US dollar Canadian, and the US dollar New Zealand dollar. From there onwards, you might start to add on a couple of cross pairs just to add in some spice. In case the US dollar is not performing very well and the market starts to lull, then you can start to add in a couple of cross currency pairs. For example, the Euro yen, the Pound yen, the Euro pound. Then advanced traders, you can look really at as many pairs as you like. You can start to look at the New Zealand yen, the Euro Swiss, the Euro Australian dollar. There's loads of different currency pairs, 22 major currency pairs in fact in total, but as you know there are hundreds and thousands of different currencies out there. You can start to look at gold, oil, commodities, all of those things. Now why we say put those more towards advanced traders is because, for example, gold, it moves really quickly. You really need to understand the markets. You need to understand your technical analysis, your fundamental analysis. And from gaining that understanding using your Forex pairs is where you're going to find more comfort trading gold once you've mastered that. So I want you to write down what pairs you should be trading based on the skill set that you are at. And a tip is don't select too many pairs unless you have the skills and the strategies to help you. You know, there's plenty of times when Chris and I were learning and we'd be focused on some pair and really spending our time on it. Meanwhile, the Euro US dollar was flying, you know, and we could have been making money from it. So stick to a smaller amount of pairs or the amount of pairs that you can handle based on your skill level. The next thing is, why are you wanting to trade? You have to have a big enough reason why. Now, the reason why is not about money. We all trade to make money. It's got to be bigger than that. Maybe what you're going to do with that money, something that's going to fulfill a dream, fulfill a goal, help somebody, give to charity, whatever it is. Because if you've got a big enough reason why, there are going to be times when you don't feel like analyzing the markets. You don't feel like you're moving forward. You might get despondent. You might get lazy. If you've got a big enough reason why, you will continue to move forwards. So I want you to write down why trading is the only way and make it personal to yourself. So now you know what type of trader you should be. A scalper, intraday, swing, long-term, whatever trader it is that you should be. What you want from your trading. What pairs you should be trading. and why you want to become a professional Forex trader. Now this makes up the basics of your trading plan. Now a trading plan is all about your steps to becoming a professional trader. It's the most important piece of your future as a Forex trader, and something that we define with you through the training and adapt onto this. But this is to give you an idea of where you should be going right now. So I hope you've enjoyed that part and it's given you an idea of what you should be doing, what you should be looking for. I want to do a quick quiz with you. This might be more towards people who have dabbled in the market a little bit or currently trading, maybe not the people who haven't looked at it at all. But I want you to write down Y for yes or N for no on your paper answering these questions. Can you win on the simulator or your demo account, but as soon as you trade on real money, you lose? Yes or no? After a winning streak, when you finally think that you've got a handle on your trading, do you and your trading self-destruct? Do you sometimes get the feeling the market is going to punish you every second, the very second you enter a trade? Do you feel embarrassed and ashamed about your trading results because you expect better from yourself? Do you go on winning streaks of days, weeks, or even longer and then give it all back in practically no time at all? Are you so gripped by fear you can't enter a trade until it's taken off, and then you chase it, only to break your rules, enter late, risking too much of your hard-earned capital? If your method calls for you to enter on a pullback, but you can't wait, do you jump in too early? This was one of my biggest problems. Are you afraid the market will take off and leave without you? Do you feel like you have to be in a trade because otherwise you're going to miss out on all the profits, making you lose? Do you take premature profits because you can't stomach the feeling of losing? If you answered yes to any of these questions, and the issue occurs probably more than once a day, it probably significantly affects your trading and definitely affects your results. You need to get some help. And this is where Serene Education can help you achieve the results. Get educated using the best approach. The first thing that we have for you tonight is Forex Made Easy. This is an online training course where you can do it in the comfort of your own home, around your own working environments, your own time schedules, and you can go at it step by step. There's a 100-page downloadable manual, step-by-step process, how to go through the course. Chris and my story, how we got from where we were in South Africa to where we are right now. Your glossary, your trading plan, schedule, and blueprints. In the first disc here, you are going to be brought right back to basics. Whether you are advanced or not, it is important to get your basics and your grounding correct. You're going to look at the common mistakes that traders make, different types of trading styles, your Forex major pairs, bull and bear markets, understanding pips, spreads and commissions, very important, otherwise you won't know what you're doing, and different types of charts. The next disc is going to cover fundamental analysis. Now this is your news. Okay, you need to know what news is important and what's not, and where to find it, why to trade, and when not to trade. The next disc is going to cover technical analysis. Here we're going to look at your trend lines, your support and your resistance, looking at different types of chart patterns and different types of indicators, for example, your MACD, your moving averages and RSI, to help you get a big picture of what is happening in the markets. On disc 4, you get trade, money and personality management. Now, we are the only company, I think globally, that will teach you how to trade according to your personality. And the reason why we do that is because we teach on a very individual basis. So we understand your personality and help you apply that to your trading. So that's really important as well. Disc 5 will help you get a broker. Now, brokers are your own personal preference. You can choose whichever one you want. We use FXCM, and this is what is used in the training. We'll show you how to get that broker, how to set it up, how to navigate your way around the program, and how to actually place a trade, put in a stop loss, put in a limit, so you know what you're doing going forwards. Disc 6 is winning strategies. Here we're going to take everything that we've done from Disc 1 to 5 and combine the whole lot together in our Forex Made Easy strategy. Chris will be showing you that this evening live on the chart, so you can see this actually implemented and how it all works. You're also going to get a couple of bonuses, what the professionals wish they knew, which is another 5-part training course, the best times to trade and which pairs to trade. It's so important. As I said, there's so many currency pairs out there, but you've got to trade the right ones at the right time. The deadly sins of Forex trading and why 95% of Forex traders fail and how to avoid their mistakes. Check the boxes. This is a checklist for you. So as you're analyzing your charts, you've got a checklist next to you that you can tick off to ensure that you have gone through all the steps. So we've put together your basis and your start of your trading plan. You're going to get a daily schedule, a success chart, so you can see where you are and what you are possibly lacking, and a little plan to show you how you can potentially make 500% return on investment in just 4 weeks. And bonus 3 is the daily steps of professional traders, which shows you Chris and my steps that we take on a daily basis. You'll also get the currency correlation strategy DVD. This is a strategy that we use to potentially triple the amount of money that we make in the same period of time, which is always a fantastic thing. And all of this is £297. You can check our website to confirm these details. So it's an online training course that you can do in the comfort of your own home, at your own speed, in your own time. Last year we ran a limited time promotion, and inclusive of the online course, we also added a 1-day live training course from 10 a.m. to 4 p.m. in London Heathrow, and it was fantastic. We did a couple of those courses, and these students got to have live hands-on training using the Forex Made Easy strategy. They got to get a clear approach to understanding and applying that currency correlation strategy, making more money. They got full technical and fundamental training, trading plan development, tips on the trade, on how to master your trading psychology, and group analysis. We did group analysis using the Forex Made Easy strategy so that they were ready for Monday morning trading. So those people were rewarded that acted last year. The great news is that I brought it back for January because, as I said, January has got to be the best time of the year, and as long as people are willing to step up and move forwards, I'm willing to support them. So that is going to be included. But it doesn't end there. Keep calm and bring a friend. There's nothing better than learning how to trade when you've got somebody next to you that is wanting to do the same thing as you and learning alongside you. That is, I think, one of the reasons why Chris and I became such a success, is because we're both so different. We trade so differently, but yet the support and the understanding of the markets was both there. And so what we decided to do, for just £100 more, you can bring a friend along with you. Plus, something else that you will not see from any other training company globally, and that is our promise. At the end of the training, we will give you your money back. We will give you a voucher for £297 that you can use against any further training, making this course completely free. So let's recap. You get the Forex Made Easy online, which in this case will be done as a pre-course homework, so you get to understand the markets before you get to the training. You get the 1-day live training. You get the second ticket for just £100. You get your money back voucher on completion of the course. And as a final gift, we'll give you lifetime access to the VIP Traders Lounge, all for just £297 plus £100 for the second person. But this is where things get a little interesting. Maybe you are ready to make Forex trading your business. Maybe you don't want to dabble. Maybe it's time that you are serious, that you want to make those progressive steps to becoming a full-time trader. You might be looking for a professional trader to give you a helping hand on a daily basis, on a more personal basis, on a one-to-one basis, guiding you through your trading, pushing you every single day for the results and helping you achieve your goals. So many people need more than just training. They need motivation, they need encouragement, they need support, and they need it more than just on a one-day's training course. And this is where our year-long professionals course comes in. We started this in, I think it was July last year, and it's divided up into different phases. The first phase is, no matter what level of trader you are at, you are brought back to the Forex Made Easy online training. You will need to go through that training. You will be given homework, you will be given tasks, and you will be given criteria that you would need to meet in order to be able to be moved on to phase 2. Here you will move on to FX Ultimate 4, FX Ultimate 8. From there onwards, you will again have to pass certain phases before you move on to phase 3. Here you will come and live with Chris and myself in our home for 2 days and 2 nights and have live training with us, looking at the markets live in action and analyzing, learning and developing your skills even further. Phase 4 is pretty much a mixture of the whole lot, but you will get you into the private traders lounge. This is not the VIP lounge. This is a separate lounge for our year-long professionals. We do trade reviews, we look at trade developments, we look at your plans, we look at all of that. But inclusive in all of that, throughout phase 1 through to phase 4, you get private Skype training sessions throughout the year. These are done every 2 weeks where you log in online with Chris and he will do live analysis with you. He'll answer all your questions. He'll have a look at how you're doing your analysis, make sure that you're doing it correctly, run through the trades that you've done, have a look if you've had any losses, any profits, and start to design and develop that as well. So this is done over a 12-month period, and this is where we are starting to see the results. Why do traders rate this training? Well, the strategies are very visual and they're very easy to use if you know how to use them. It builds confidence and consistency by having a trader check your trade analysis before you enter a trade as well as whilst you're in the trade. Having one-to-one support on a weekly basis ensures momentum is kept up, and that is a massive key to success. It's the momentum. If you run out of the momentum, you start to fall further and further back. And the cost of the training is less than what they've paid for a 2-day course in London. A lot of our students have been on previous courses and spent an absolute fortune and not come away with anything. So that's always a bonus. And on top of that, you get to end up with FX Ultimate 8, one of our greatest strategies. Once you know how to use it and apply it properly, rather than just looking at it on a visual type of basis, it is a fantastic tool and a fantastic asset to help you make those profits. But best of all, they've seen how training equals the support, equals the confidence, equals the results. And at the end of the day, let's face it, you always want results from your training. There's no point in going, getting educated, walking away, and not getting the results. The results are ultimately down to you, not down to us, because you've got to put the work in, but it is our job to make sure that we give you the correct information and the correct training, the correct support that will give you that confidence in the results. Have a look at Saminder. This is one of the guys on our year-long professionals. He started with us in July. In 1 month, he had made 779 pips after being on the FX Professionals training for just 5 months. Now you can see his full review on the Serene Education's blog page on our website. But 779 pips is an absolutely outstanding amount for somebody who has been going through this training for just 5 months. Then we have a look at Demi. Demi also wrote in 3 weeks he gave us the amount of pips that he had made over those 3 weeks. He said, I look forward to the continuous education, guidance and mentoring, and thank you for helping me take the first steps to changing my life. Again, these details are in full on the blog, on our blog page. He made 892 pips in just 3 weeks in November. In December, 120 pips. Now, why do you think that might be less? December, the market slowed down, there's less opportunities, and we do not trade the last 2 weeks in December. In January, bearing in mind, we came back on Monday this week. He has 255 pips up already. Absolutely outstanding results, and I'm hoping that he's actually online with us this evening to share with us his story and where he is. So if you just bear with me whilst I find him, please. Hi there, Demi. I've unmuted you. Can you hear me?
Hey, Nikki. How you doing? Yes,
yeah,
I can.
good. Can you just turn your volume up?
Turn my volume up?
Yeah, that's perfect. Thank you. So, Dem, if you can just share with people, you know, what you were doing and where you are now, and how you're feeling about your trading at the moment.
Well, to say I'm feeling over the moon is a bit of an understatement, really. But I'll take the guys from where I came from. Really, I'd been dabbling in FX for, I would say, a good year and a half, and actually everything that you previously just mentioned, Nikki, you know, the personality traits, the timing, and everything, it was all so relevant to me because I was a full-time worker, also trying to start up my own business, but loving the idea of the buzz of an intraday trading, which just clearly didn't go hand in hand. And so for myself, I took a break from FX, and then we touched base again in July. And for myself, I'm being totally candid with everybody, and with total respect to you and Chris, the reason I came back in is obviously I know your success story, but at the same time, I love the fact that you guys were never really involved in FX to begin with. It was something that you came across. So it really, I felt that as like, you know, this is really approachable. This is something that I really can do. So I started yourselves on the FX professionals, gave my first 5 trades in. But then after that, for me, what really excelled was, firstly, the constant communication that I've had with yourself and Chris. Secondly, the buddy system that you guys have set up, and that is the real momentum, which you mentioned. That's, I think everybody needs a nice kick up the backside here and there, and you know, my buddies and I do that, which is great. But then also, it's just been the refocus of my strategy, my plan. Just really, I kind of know now what I need to do, and everything's been fine tuned. And obviously, you know, the first time I went onto FX4 and FX8 was indeed November, and that was, you know, a fantastic month. And that's actually when I realized, you know what, I think I've got it. I think I understand what I need to do. Yes, there were a couple of losing trades in there, but those 892 pips were pretty much the net pips that I got for the month, which was fantastic. And then obviously, you know, in the last couple of days in Jan, had a good week. So fingers crossed, it looks like I'm on the path, but that has really been just, you know, focus. I know what I want at the end of this. You know, we can excuse the old cliches, but everyone wants to be out of the rat race, and it's just about getting out there and doing it, really. And for me, I find that FX professionals, with the support, because that's key, with the support that you guys have set up, and actually the other guys in my situation, just bouncing ideas, notions, you know, what do you think about this, you know, together, that's really helped, and that's kind of like helped steer me, fingers crossed, to the path that I'm in right now.
Well, it's fantastic. Your results have been great. And so did you say that your results already started coming in November, and that's when you went on to FX8?
Yeah, that's exactly it. I mean, before
That's
that,
brilliant.
I mean, obviously you like to test me, Nikki. So before that, we had to supply 5 winning trades on an FME, which was basic. But actually, that was really good because just doing the FME for everybody out there that's thinking about this, you know, when you strip back the charts to effectively just the charts and a couple of indicators, that really helped. You know, you focus more on your actual entry points. You focus more on what the charts are specifically trying to tell you. Thereafter, FX8 is the culmination of so many indicators, which helps. But just stripping it back and doing those 5 trades, and I know I don't just speak for myself. I speak for a number of my buddies that are also doing this now. That was very, very beneficial. And then obviously thereafter, you see the results.
That's good. Well, Demi, thank you so much for coming online with us. I know it's your little girl's first birthday, so I really appreciate you popping online. So thank you very much for joining us.
No problem at all, Nick. Thanks a lot. All the best.
Right, so that was Demi giving his point of view of where he is at right now. Glenn Codd, he's also on FX Professionals. He sent this in to me yesterday, I think it was. It was all the trades that he's taken since he started, so back from the 31st of the 10th. Now you can see he's had some losing trades. Some people, not some people, most people can't win them all. But you can see that after the period of him being with us, he is up 519 pips, which is a great achievement. Then you've got Graham. He has not had one losing trade on his live account since starting the year-long professionals trading. A fantastic result as well. It really should be inspiring to a lot of people if you're out there. We've got Sean Voss. If you guys go onto our Facebook page, Serene Education, you'll see there's a lot of testimonials there as well. I've just taken that from there. But what I wanted to point out to you here was, he writes at the bottom, I've not had one losing month since I did my course with you guys, which was way back in 2012. Not one losing month. An absolute great achievement. And then we've got Neve Landy. She is one of my favorite ladies of all time. She wrote to me, I think it was yesterday, to say she's happy to say that she's had a great start to the year so far. She's made 540 pips. We then went on to start talking about an account that she had blown a few years ago, and I'm hoping that she's also online with us from Ireland to share with you a little story which I find extremely inspiring. I'm just going to unmute her and see if we can hear her. Hi, Neve.
Hi, Nikki. Hi, everybody. Can you hear me?
Yeah, we can. Thank you.
It's been a great webinar so far. Thoroughly enjoyed it. And I would just like to tell everybody I'm not part of Serene, in case you think I'm just blowing your trumpet. I met you for the first time. I was trying to think, was it almost 5 or almost 6 years ago when I did the Living with the Trader
5, I think.
Yeah.
Yeah.
And I started off with great hopes and got lazy, got careless, and blew a few accounts. But I'm very, very persistent. So I kept going back and learning to be more patient. I suddenly thought, do you know what? Nikki and Chris have taught me how to trade, but there's only one way I can improve, and it's by practicing and going back to the basics. So that meant learning to be patient and learning to be more disciplined and not jumping in too soon, not closing my trades too early, and so on. Anyway, I started trading seriously again about a year ago, and as I told you, that's going very well. I'm up about 60% in the last 8 months on my account. But I came across, I'm also with FXCM, and that's the account, but I found an old account that had about $54 and a few cents left in it. I had blown it a few years ago and forgotten about it. So I thought, I'll see how much I can build it up to on the days, because I'm retired. So it's on the days I had nothing to do and could afford to sit in front of the computer and be happy with making $3, $10 on a trade. And it was, and it worked. And yesterday I had over $700 when I checked.
So you went from $54 to over $700?
Yeah.
It's fantastic. So do you know what? Just adding in there, it just shows that you don't have to have a lot of money, huh?
You don't have to have a lot of money. You do need an awful lot of time to do that. I do not recommend sitting in front of a computer as long as I did, but I had to prove to myself that I wasn't stupid, that I could do it.
It's fantastic.
And I'm so thrilled. I couldn't have done it without the Ultimate 8, I can tell you.
That's brilliant.
I just could not have done it. I check that before I think of entering a trade. I check that it's all in order.
That's great.
So
I'm so proud of you. I mean, do you know what? It's always great to do a little experiment. I think Chris did one a couple of years ago. We opened up a new account and he turned his $3,000 into $10,000 or whatever it was, but he started off with a lot of money. But to start off with $54 and to bring it up to $720, it just shows the people out there that are listening that maybe think that they don't have $10,000 to go and stick into a trading account to start trading, that there is a way to make an extra income. Agree with me there?
yeah, I would actually almost, right, if somebody asked me, I would tell them to put $100 in an account instead of playing with the demo account, because you get careless with the demo account because it's not real money.
Yeah. Yep, we've had that as well.
So
I think a lot of people that open up a demo account, because the demo account gives you £50,000 or dollars, whatever currency you choose, you automatically think, oh, I've got 50,000 in my account. Let me go and see what I can do with it. So
I think there are a few things you've got to do, Nikki. I had to, go right back to basics. Forget all your education, forget all your arrogance or experience or anything else. You are a rookie trader, and you have to keep practicing. But as you always say, practice isn't enough unless you're practicing correctly.
That's it.
That you have to stick to the rules, and don't be proud. There's nothing wrong with making $5 after a whole day, so long as you've had more right trades than wrong ones.
Yep, exactly. You build up your confidence by getting winning trades, and then you start to up your stakes from there.
And the fact that I always felt I could get on to Serene. If you weren't there, Chris was there, and there was always help or advice. If
That's
I was
good.
stuck about something, you're always there. And I mean, that gives great confidence in itself. So, I'm thrilled. I'm
That's
absolutely thrilled.
Fantastic. Thank you so much for joining us, Neve.
Not
Hope the
at
weather's
all.
better in Ireland than it is here.
Oh, God, it's freezing, and the wind is unreal.
Oh,
So, yep, much the same. So I don't know. I don't know when I'll see you next time. I'm over in the UK, I suppose.
okay. Thank you very much, my darling. I'll speak to you
Not at
later.
all. Talk
Thank
again.
you.
Bye.
Bye-bye. Right, so that was Neve. I always find it beneficial for you to hear first-hand experience from people who have been through our training. So you're not just seeing things that are written on the charts or on the slides, should I say. Another one from our Facebook page as well is Jenny McCardle. She said, I've just dedicated the last 12 months to consistent trading and found my account 200% up. Chris and Nikki are so inspiring, genuine coaches, and I highly recommend you get in touch today, even if you're thinking about trading. I guarantee you won't regret it. So a year-long professional training is broken down to payment plan because we don't want you to fork out a huge amount of money whilst you're starting to trade, and I think that's fair. So we spread the cost. The total cost of the training over an entire 12 months is $4,000. Your first payment is £1,000, which is due on booking, and then 10 monthly installments of £300. But, as I said, I'm in a good mood. It's January. It's the start of a new year. I'm going to give you a special offer that will expire on the 30th of January. Your first payment will be £500 that will be due on booking, followed by your 10 monthly payments of $300, bringing your year's total training to £3,500. It works out to maybe a McDonald's burger, chips, and a cool drink a day. So how do you get onto this training? Well, I'm going to run a quick poll in a minute. You can answer the questions or just email us at info@sereneeducation.com. As Neve said, Chris and I are always the front people of our business. We do have people with us, but when it comes to dealing with our clients, we don't hide behind anyone. We speak with you directly. We support you directly because no one can do a better job of supporting what we can. It's not arrogance. It's just because we know that we can support you the best. We want you to connect with us on Skype. These are our Skype addresses, so if you still got your pen and paper, write these down. Connect with us on Skype. Send us a request. Tell us who you are, because we do get a lot of requests from the US wanting to be our friends and saying, hi, lovely, this and the other. Let us know who you are, because being in contact with us on Skype, you get up-to-date information straight away. If there are last-minute places available for training or webinars or anything, it gets sent to you directly on Skype before it gets sent to our database, so you always get first opportunity to get booked onto anything. Also follow us on Facebook. It's Serene Education. If you like and follow us, you'll get all our up-to-date things that we put on there. We put chart analysis, we put trading things, we put our Forex webinars. You'll see all the different reviews that are up there. You'll also see reviews left by hundreds of people on our sereneeducation.com homepage. If you scroll down to the bottom, you'll see that we are ranked first out of over 4,000 companies in the UK for education. So, before I hand you over to Chris, I'm going to run a quick poll. I know it has been a long webinar, but I wanted to give you the best benefit of understanding the start of 2015, getting you excited about what you can be looking at. I hope we've achieved that. Right. Well, as I said, I hope that you've had a great webinar with us. We wanted to make it a little bit more interactive, make sure that you are motivated and happy and ready for the year ahead of you to see what Forex trading can potentially do for you if you're prepared to put in the efforts, have a little bit of oomph behind you, and really put everything that we teach you into practice. I've shown you that you can get results. It's all up to you now. So what I'm going to do, I'm going to hand you over to Chris. I know this webinar is going to go on probably about 15 minutes over the hour, but this part is really important, so you can get to see the two different strategies, how they work, where you can go from and where you can get to. So I'm going to hand you over to Chris now, who's going to run through live analysis. The markets are open live, so you're going to see things moving around a little, but enjoy it. And again, thank you very much for joining us.
Okay, as promised, Nikki mentioned we're just going to touch on the four majors this evening, utilizing the Forex Made Easy entry-level course, the FME, and as well as the FX8, which is the big boy that incorporates the 8 additional indicators, but in a more friendly way, or a very mechanical approach. So, starting with Euro, just give you an idea. This is just an open, just a candlestick chart. Nothing fancy about it. There's nothing on here at all. It's pretty much naked. And just listening to both Demi and Neve earlier. And thanks, guys, for giving us some of your input. It's fantastic seeing how well you guys have been doing. 2015 is going to be just as big, if not bigger than 2014. So fantastic. Thank you very much for your time. They pressed on a very valid point, and the fact is, you got to understand the basics. Demi said the same thing. Everybody wants to be an intraday trader. They see it every single time. It's always advertised. They want to get into that. They want to be this intraday trader, picking up all these pips, etc. And as Nikki mentioned, a lot of us aren't able to do that. And it's vitally important that you get over that psychologically, because you will always, it's just a human trait that we always will try and do something that we just aren't able to do. If you are working 9 to 5, or you're a family, if you have family and you have other commitments, or you're working on a contractual basis, so you're working either midday or late evening, you have to sit down, and this is part of the whole process, understand what it is you want from trading, but you've also got to work out the best time frames in order to maximize that return. So vitally important. If you're doing a 9 to 5, there's no ways you're going to be able to trade intraday. Not a chance. And the biggest part of trading is getting that solidified. So, and that's part of your trading plan, and that's vitally important. Getting those first steps knuckled down. And then going forward, it's just peace of mind. Also, when Nick and I first started trading, we had every bloody indicator you can think of on the charts. We got lost in the indicators, and we didn't really get anywhere very, very quickly. And a lot of our students will probably vouch for that, because you can get really, really lost in a lot of the indicators, because there are so many indicators out there. There are hundreds and hundreds and hundreds of indicators. But the most important thing to understand about an indicator is it's based on price itself. When I say price, I'm talking about what you're seeing right now on the chart. We need some sort of appliance, or in this case software, to plot price, the buyers sellers out there, and that gives us what we see right here on the hard right edge. It gives us what we see right now on the charts, and that is what we're seeing. So if we're seeing a euro against US dollar, this is euro plotted against US dollar, and you can see the euro has obviously been pretty negative. So each one of these candles represents a month, and you can see how negative the euro has been against a very strong US dollar. So price itself is pretty much going to be your best friend, and it's something you need to understand and get to understand. And the quicker you understand price itself, the better the trader you're going to be going forward. Okay, because it all starts from a naked chart. When you do your analysis, it's just looking at it as being a great artist. Blank canvas, and then you apply multiple layers, and then you come up with an absolutely fantastic portrait at the end. And that's pretty much what you're doing when you're looking at doing your analysis. Okay, so each weekend, Nikki and I will sit down and we'll go over the prior week's movement to see exactly what price has done in the prior week. Therefore, it'll allow us then to gauge what price is doing right now, so we can then make a valid assessment of what price is likely to do for the following week. So you need to do exactly that when you look at your charts. Okay, so the FME, as Nikki mentioned, it's a very, very standard template, nothing fancy about it. Okay, it's just price and 2 indicators and 2 moving averages. Okay, so taking it back to its very, very basic form. So here's the euro against US dollar on the monthly. I can then apply the template, and there it is. Just a couple movements on the mouse, and up is, here's the template. So if you look at euro against US dollar on the monthly, you can quite clearly see on the hard right edge, this is where everything's happening. You'll notice quite clearly how visual the layout is. Okay, we have just price itself, green for up, red for down, self-explanatory. We have 2 moving averages, which is the 50 period moving average, and we have the institution moving average. And then below we have the RSI, which is on the 14 period, and then we have the MACD. Okay, but what we've done is we've gone one step further, and we've actually applied an algorithm where it plots where the MACD gives us not only a crossover, let me just pan in so you guys can see it, not only the crossover, okay, of the fast moving average over the more lagging one, but also the histogram crosses below. So if you're having a negative crossover on the moving average, you would ideally like to see the histograms also trading below the 0 level to give you a genuine negative signal. And then your RSI would obviously have to be below 50 to constitute that it is in a negative selling setup. Okay, and then you look at the moving average, you can see we're trading below the 50 period moving average. So therefore, we are looking at here a negative sentiment build up, and therefore we're looking now to say, well, if I get into this trade right now because it's giving me a selling opportunity, where's my likely target? Okay, and that's where all your analysis needs to come in. We need to look at price support and resistance levels. We need to look at trend direction. We need to look at the major support and resistance levels to give us a target. And the most obvious target on this particular pair would have been our institution moving average. Why? Because if you look over the past 4 years, price has actually interacted with the institution moving average on 2 prior occasions, and when she did exactly that, she did have the institution moving average did support price on each of these occasions, but price actually moved or changed direction on each occasion. Okay, so that would definitely be a target level, and you can see quite clearly right now what's happened since, I think it was June, July of last year. We've seen a lot of selling pressure on euro, and what it's done is we could have said, well, great entry here if you were trading off a monthly chart, and you could have seen that the institution moving average would have been a first port of call, because we've been and it's done exactly, it's tested that or used it as a target on 2 prior occasions. So why not? It'll do exactly that. It'll move back to a price support and resistance level. So you can see that December, we saw a lot of selling pressure through December, and you'll see that December actually closed pretty much on the price support and resistance levels before, and actually testing the institution moving average. But the most important thing to see on this particular pair, which what we haven't seen in the past, is each time price has moved to the institution, she's actually been supported on each occasion when she's physically closed. You can see here back in 2010, in fact, we actually saw price trading below the institution moving average for a period of time. However, by the close of that month, price had reverted and closed higher. There again, through here to June, July, August, September of 2012, in fact, we saw price actually testing the institution moving average, but by the end of that month, price had actually closed higher, which subsequently led to further support, less selling sentiment, and more buyers coming on board, which pushed price higher. Here, on this occasion, price in the close of December actually closed lower. So that's a very negative signal, because over 4 years, we've had support at this level. Now, heading into it for the third time, we've actually physically seen a close lower, and a very bearish close. Not a lot of wick on either side, so telling us it was genuine selling pressure. So not very, very good. And then now we're trading below that level. You're thinking, well, Chris, if I'm trading below the institution for the first time in 4 years, this is clearly a breach, a negative breach. So where's it likely to go to long term, i.e. 2015? So this is when you need to look at the bigger picture. And if you look at what price has been doing since the lows here in 2000 and 2001, that would have been our low to our current high. Okay, you'll notice I'm using fibs. This gets taught to you in the course, but you'll notice how Fibonacci actually has played a vital role for price over the years, in fact. And you can see now, just by plotting this quick indicator on the chart, you'll notice that price is now giving me a likely target, which was a price support and resistance level in the past. So now I know, okay, great. If I'm looking long term for a valid target, this area here at 11887 and change could be very much a likely target for the first quarter or the first 6 months or 2015, in fact. And just looking at the low of the current candle that we have to that support level, there's in excess of 598 pips. We're not going to get all of that. Let's just call it, let's just go with an even 500 pips. More than enough there, guys, to see a valid return on time invested. Okay, so the indicator is telling us here, on this very simple indicator, it's telling us we should be looking for selling. Perfect, we've got all that. Everything's telling us we should be looking for selling. We've broken a major support and resistance level, and a valid one because it has been a major support in the past. The fact that price is trading below that level tells us indefinitely that euro is long-term looking negative. Okay, so this support and resistance level, i.e. the fib level, but also the institution, now becomes my ceiling level. So if price consolidates and tends to pull back, as long as she fails to break back above this level, then I'm looking for this to become the new resistance, and then the continuation will occur, and then it will continue it down to my next level of support and resistance, which will be this level around here at 1188 and change. Okay, so this is just one pair using the FME. Very simple, not a hell of a lot of analysis. It's not brain numbing stuff. It's just following simple rules. Okay, you have to understand the long-term support and resistance levels. You have to know the long-term trend. You have to be well aware of major support and resistance levels. Are you trading currently above them, below them? If it's below, are you in a negative trend? Yes. Then you're pretty much just doing some sort of checklist system. And that's what Nikki mentioned earlier. You've got to follow a checklist. You've got to treat your trading very mechanically. The moment you bring emotion to the table, you're likely to fail. You've got to have a step-by-step process in your trading. Keep it very mechanical, and you'll find you're making less and less mistakes as you go forward. Now I'm going to bring on sterling. Okay, there we go. Naked chart, candlesticks. You'll notice pretty much the same outcome as what's happened on euro has happened on sterling. If I now apply the FME template to that, you can see how visually pleasing it is. So here again, we had a crossover on the MACD. Remember, this is a monthly chart, guys. So following the rules, we have to wait for the signal to arise. Over here, it's giving me a signal with the MACD crossover with the quicker moving average below the lagging one, which is the red. A histogram is below the 0 level, and our RSI, importantly, is also below the 50 line. So it's telling us we should be looking for negativity, but we should also be looking for price to be trading below the institution, which is a negative signal, but also ideally below our 50 period moving average. On this case, you can quite clearly see that's the case. And if you've just been trading monthly time frames on this particular time frame on this particular chart, you should be up in excess, as it stands right now, in excess of 800 odd pips. Okay, that's just looking, if you just went on the actual signals, and they are valid signals because we're moving lower, we're not making new highs, the trend is negative, and a valid target would have been the current level where price is trading right now, because you'll notice in the past we had almost 7 months of consolidation at a particular level, which constitutes to a major support. So you would have to physically put that on your charts, and that would have been your target. So going as it stands right now, you can see that this month has been very negative for the sterling against the US dollar, but we're taking profit right now because of the fact that we're trading into a major support and resistance level. But if you go down to a weekly, you can see how price has actually been following it quite well. In fact, if I had drawn my fib levels on this particular pair, the start of the uptrend, these lows down here, you can see how price has used these price support and resistance levels to the T. And look where price is trading right now on the weekly, at a major support and resistance level, or fib level. So as it stands at the moment now, we should still be looking for negativity. The RSI gave us a sell signal way up here, guys, right at the top. And if you'd taken that opportunity, your first port of call would have netted you in excess of 150 pips. Wait for the break below that support and resistance level, entered again to the next level. There's an excess of 200 odd pips on that particular opportunity. Next one would have been the opportunity, break below here, next level 200 pips. You can see how being aware of your price support and resistance levels actually allows you then to look for opportunities in the direction of the trend. And as it stands at the moment now, everything's looking negative for sterling against the US dollar, so therefore we should be looking for selling opportunities. Therefore you would expect to see your indicators down the bottom here telling you that. Okay, and then just being patient, as Neve mentioned, being patient enough to wait for price to close lower, and then taking the opportunity, enter, and your target. Just this prior week, if you wanted to, you could have got an excess of 150 odd pips. So that's a simple template in itself. Okay, guys, self-explanatory. You can utilize this on any time frame. There again, as Nikki mentioned, depending on the amount of time that you have to trade. Very, very important. Getting back to that, to your strategy. Okay, very, very important indeed. So now what I'm going to do is I'm going to show you now the last two pairs, which is going to be the US dollar Swiss franc. But instead of using the FME, I'm now going to show you what the FX8 brings to the table. And the FX8 has been something that Nikki and I have been working on for years. It's meant to be more visually impacting, which the actual indicator box is doing most of the work for you. You are then just reconfirming what you already know just by looking at the charts and doing your analysis, reconfirming. You're getting the indicators to reconfirm what you already know and see on the charts that's happening. And that's what you want to do as a trader. We want more probability in our favor. We don't have crystal balls. The indicators have all been built, and all those indicators are actually being applied to price, and an algorithm has spat out a result. And if I apply that FX8 on here, there we go, straight away. The one thing that really, really stands out is the candlesticks. There's no any colors. There's only two colors on here. There's green and red. Okay, if the candlesticks are red, then you should be looking for selling. If the candlesticks are blue, buying. If the candlesticks are red, then you should be in a negative trend. The RMO will tell you if you're in a negative trend. If you're in an uptrend, the candlesticks will be mostly green or blue, and the RMO would confirm that. Okay, here, the beauty of this, if you look at it over here, you'll notice there are 8 time frames and 8 indicators. The time frames are monthly, weekly, daily, 4-hour, hourly, 30-minute, 50-minute, and 5-minute. What we want to do as traders, we want to trade strong long-term trends. We don't want to trade consolidation. We want to trade a very strong trend, whether it be bearish or bullish. And if you look at what it's telling me right now on the hard right edge for the US dollar against the Swiss franc on a monthly, you'll notice that everything's blue, bar the institution. The MA down here stands for the moving average, and this over here is calculating the institution moving average, which is this green line. And if you look at it, we have a blue arrow. And if I just pan it so you guys can see more of that, just move it over. Blue arrow. The candlestick is blue. The RMO is above. The OSMA, which is a hybrid of the MACD, is also bright green, so it's telling it's positive. Okay. The only thing that's not in our favor is the institution moving average on the monthly time frame. Why? Because it's still above price. So that would be a vital target or potential long-term target for price as we head higher. Okay. If I drop down to the weekly now, straight away, this is another great thing about this particular setup, is when there is a genuine buy or selling opportunity, there will be this alert box that pops up and it tells me straight away, buy signal, US dollar, Swiss franc on the weekly chart. Everything on the weekly is positive. All my indicators, and there they are telling me that for the weekly, they're all those algorithms that are plotting these indicators on that specific time frame are telling me that we should be looking for buying opportunities. Now, the rules are, we need to see an arrow, the candlestick needs to complement the arrow, the RMO needs to be above the 0 level. If it's blue, all my moving averages need to be below price, supporting price, which is what you want your moving averages to do, support price in this case because it's positive. And my OSMA is above the 0 level, and it's bright green. But it's telling me straight away that I should be looking for buying opportunities. I'm not going to sit here and wait for selling opportunities. I'm going to buy. It's telling me to look long. So therefore, my focus shifts when I move to any time frame. My focus shifts to looking for buying opportunities. So when you're seeing a bit of red intraday, and the R squared is complementing that negativity that we're seeing on our intraday, it's telling us we're seeing a consolidation in a positive long-term trend. Okay, guys, there we go. Daily, US dollar Swiss franc. We've got indecision here, guys. We've got indecision candles, but they're still painted positive. So it's just consolidation in a positive trend. And when you see another candle moving high again, so indecision, a decision candle is telling you, that's okay, that's what I was looking for. I don't trade in indecision, I want a decision. And the decision candle is in the direction of the long-term trend. I can then get back into it and then target my support and resistance levels to the upside because you're still following the rules. Last candle on the daily was a blue arrow. Candlesticks are blue. All my moving averages below price supporting her, which is positive. RMO is still making higher histograms and above the 0 level, positive. My OSMA is positive green. So I'm not breaking any rules because my mechanical approach is telling me I should be looking for longs. Therefore, just to be vigilant, patient, as Neve and Demi mentioned earlier, patient enough, and when the signal arises, taking the trade when it presents itself. That's the beauty of what the FX8 brings and what Neve mentioned. She did the course years ago, but when she just took it back to basics again and just followed the rules systematically and followed them mechanically, you're likely to make less mistakes. Okay, you're not bringing that human emotional thing that we're so. It's just a human trait that we get stuck and we go, should we? I'll give it a bit more time. I'll wait. And before you know it, prices move 60, 70 pips, and you get in at the wrong end of the trade when things are starting to pull back. So this is the beauty of what the FX8 brings to the table. It's doing most of the work for you. All you're doing is just reconfirming what the indicators are already confirming for you. Last one is US dollar Japanese yen. Here again, we've seen a lot of movement for a very strong US dollar against a very weak yen, guys. Self-explanatory here, and you can see quite clearly in the chart. We've seen a lot of negativity for US dollar since 2006, pre the recession. However, bottoming out in 2011, and since then we've seen a lot of movement to the upside for a very strong US dollar recovery. However, yen still lagging behind, a lot of quantitative easing, printing a lot of money out there trying to get the market to move again, and the US dollar taking well advantage of that. But it's a very plain, simple chart. Nothing's really happening until we apply the FX8. Straight away on my monthly, it's telling me I should be looking for a buying opportunity. Let's look at the monthly. Arrow. Let me look for my arrow. Oh, right down here in 2011, I think it was. Buy. But we only really got a genuine signal way up here. Okay? But the candlesticks are blue. RMO is above the 0 level. It's a positive signal. The OSMA is above and bright green, so it's telling us it's genuine buying. You'll see here on the hard right edge, you'll see the indicator box. Look at the monthly. Everything is positive, and the R squared is complementing that. Okay, so everything at the moment now is looking fantastic. Long term, however, you're starting to see a bit of indecision creeping in. And if you look at last month's candle, guys, remember I told you, price itself will tell you what's happening in the market. You'll notice last month's candle, December, ended up being an indecision candle, a spinning top. It still closed higher than the prior month, but indecisive. So it's telling you that even though we had a very positive November, you can see a very little wick in November, so very, very strong buying. The October was also closing higher than the September, October, November. See that? Very, very positive. Then we went into December, as Nikki mentioned, not a lot of trading, less liquidity in the market for obvious reasons. So the candlestick was indecisive. So now you'll notice that on the actual candle close, it's still closed higher than November's high. So therefore that becomes a support. So body high, if we drop down now to a weekly, there we go, there's the weekly chart. You'll see we have drew the vertical line, pull back on the weeks through December. Support, as long as she stays above this level, notice the candlesticks, even though they're moving sideways, where prices are not making new highs, which is what you want in an uptrend, the candlesticks are still painted blue or green. Okay, the RMO is still above the zero level. Okay, the OSMA is above, however, it's dark green, it's consolidative. Okay, here we go, back here you can see we had 3 consecutive weeks of consolidation, but price didn't make new highs. It actually consolidated, went sideways. Okay, so it's telling you it's still positive, but there's no genuine sentiment. Bang! That's a nice one we wanted to get in. Why? Over here, because it made a new high, very strong bull candle, and bright green RMO above, histogram making, but everything's in our favor. So it teaches us patience as well. And that's the beauty of having something mechanical. And if you're taking this trade over here alone to this point at the moment, the highest point, is in excess of 800 pips. Okay, and that's just following simple rules. Here, it's consolidative. Okay, it's not making new highs. So if you want to be very, very vigilant, and if you follow the rules correctly, you shouldn't be looking to buy in a consolidation. Remember, we want to trade strong trends. If price is not making new highs and she's not making new lows, she's consolidative or ranging. Okay, and that's clearly what price has been doing through December. She's just range bound, but she's ranging in a very strong uptrend. So therefore, your sentiment, you're looking for a new high. If she fails to make a new high anytime soon, i.e. break above 121.77 anytime soon, or she fails to, and she breaks below the support level here, you're likely to see more of a pullback. And you can see the indicator box down over here is telling you that there's more selling sentiment coming through. Therefore, it's telling you it's just consolidation. And if that's the case and that becomes a new high, then you take where we started the trend from, which is this level here. Remember, we spent most of 2014, the first part of 2014, going sideways. So that'll be the start. We take it up to our current high, and if it gets below these support and resistance levels, then these areas over here become your targets. Keeping it as simple as possible, keeping very mechanical in its approach, you'll find you're making less mistakes, and you'll end up having more winners, and you'll feel a lot better about your trading. Okay, so that's the beauty of what the FX8 does. It's doing a lot of the work for you, and when you do your analysis, you're just reconfirming. That's what you do as traders. We want to get more probability in our favor. So when we have the FX8, it's doing exactly that, just reconfirming what we see on the charts already. Okay, there's Australian US dollar. Apply the template straight away. You look at the indicator box. Is it more blue or more red? It's more red. Okay, great. So we must be in a major negative trend. What has Australian US dollar been doing? It's been falling. So therefore it must be in a negative trend. So therefore wait for price, arrow, candlestick into support. Wait for the candle to close lower. There. Look at your indicators. RMO below, OSMA below, bright entry, and look for the next target. Pretty much the institution moving average as it stands at the moment now. And price as it stands now, you should be in excess of 350 odd pips up to the in this particular trade, because it's selling. Well, we know that because price is not making new highs, price is making new lows, broken a major support and resistance level. Okay, if it's broken a major support and resistance level, where is my target? Question mark. Always know where your target, your lucky target would be. and prices trading, if not right at one right now. Okay, so that's the beauty of what the FX8 holds in its own. I don't know if Nick wants to add anything more to that.
No, I don't think so. I think all I need to say is if you're on Facebook, follow us because you will get all the up-to-date information. Make sure that you register for next week's webinar if you want to come and join us. Hopefully I can put together another interactive webinar. I feel that it's been much nicer for everybody. I hope you've enjoyed it. So thank you very much for taking your time out. I know that we've overrun by a nice 30 minutes or so. But we wanted to make sure that you got the best benefit out of this webinar, especially because it's the start of 2015. So guys, thank you very much for joining us. I'm going to end the webinar. Remember, if you've got any questions, you know where to contact us. Make sure that you friend us or whatever it is on Skype, and we can keep you up to date with everything that's going on. So again, thanks very much, and we wish you all the best for 2015. We hope to see you next week. Thank you, and bye-bye.